Hey guys, just wanted to bring you a video on the Asian Open, Daily Open, Tokyo Open strategy, the exploitative spike to the high, spike to the low, or vice versa, setting that initial balance range that we talk about every New York morning update that happened at the previous session. We also do the trades together in the Discord every night for the Asian Open, Daily Open. So what I did here, let's go to the 15-minute time frame. What I did here was mark off the last 5 opens here. You can see 2000 hours Eastern Standard Time. That's when the open is. New York time, UTC -4. Here's the 5 most recent. I could do the 25 most recent. The price action remains the same. I assure you, I've been saying, if you're in any of the Discords that I'm in, I come on every night at 8 o'clock Eastern Standard Time, and I say spike the high, spike the low, ... You see the price action. People are starting to really understand how the price works, especially if you're looking to get footing in a position that you're not in already for the day. Great time to get into a position. So we'll drop down to the 1-minute time frame. I had these all marked out, so bear with me while I scroll through and get everything set up. So here is last night's Daily Open, Tokyo Open. 1-minute time frame. So we'll talk about this one in more detail because it's the most recent one. We talked about it last night. We'll go through the confluences also. So you see Daily Open, Tokyo Open, and right off the bat, spike to the high. So what are the confluences? We have all these green candles left behind, price extended from the moving averages, coming up into a support and resistance level, daily support and resistance level, and then you can see this is the candle right here, 2000 Eastern Standard Time, daily support and resistance, yearly VWAP. So that is your confluences of price. So per this strategy, you would look for a short position. They're spiking the high first, so we are anticipating after they find that high that they will retrace back down and form the low. There's always an initial balance high and low for the session. It is the range, the initial balance range for the session. So then we would open our short here. Price spikes down to the low. What are the confluences? Well, we saw you see this, the bottom of this candle here, to the dollar recovery of the previous green candle. This previous green candle was already recovered here. So we had previous liquidity to the dollar recovery, 200 moving average on the 1-minute time frame. So theoretically, you have shorted here. As price makes its way back down, you are taking profits on the way down. So you take profit on your short. Where's a good take profit level? Here we have the Daily Open lined up with the 50 on the 1-minute time frame. So you can take profits there and then move your stop loss into profit. It could be above the daily support and resistance level. It could be below. You could wait to see what this retrace does, but I would always have the stop loss in profits. Price comes down to form the low. So here we are. We have our confluences for the low. Previous green candle, 200 on the 1-minute time frame. An area of support and resistance. You're now long. You're long here. Price is coming back up. You are taking profit. Where can you take profit? Well, you do the same thing. Daily Open was right. Where's the Daily Open? Daily Open was right here. So you're on the way back up, equidistant. So now you have your short with a stop loss in profit, and you are now long with a stop loss in profit. Or I'm sorry, you are short with profits taken, and you are long with profits taken. You have 2 winning positions right off the bat in the first hour of the trading session, in the first half an hour, really. So then you see price does what? Comes here, forms another little high, pins up, finds resistance, retraces back down. So now you can move your stop loss into profit somewhere above this previous retrace level. Price finds support down here. So here's your next support level. Support, where's the support? Confluences. Confluence equals confidence. 200 on the 1-minute time frame. You got a W pattern on the 200. Price then retraces back up to the high. You can now move your stop loss into profit, whether it be up here under the 200, wherever you want. Price then comes up, takes out your stop loss on your short. So this is what happened. I'm in bed now, I'm sleeping, or later on in the session, my stop loss on my short has been hit in profit after taking profits. Win. My long, I've taken profits and now moved my stop loss into profit. The rest of the night is history. You can see we had take profit levels. Where did we set them? Well, we talked about it before the end of the session. Just a quick recap. Here we go. Where was our take profit levels? 200 lined up with the previous zone of liquidity. Monthly point of control, weekly point of control lined up with previous liquidity. You see your take profits were hit on your long position, and your short position was stopped out in profit after taking profit. So there you go. Spike to the high, spike to the low. Shorting that spike to the high, longing the spike to the low. Taking profits on both, moving a stop loss in profit. You see price came back over here, finding support here, continuation to the upside. You can then move your stop loss in profit all the way up here. So you're moving it. If you were up for the session, you can continue to look to move it up. Let's go back to the prior session. Bear with me here. Let me, scrunch the screen here. Here we go. Here is the day before's open. Unfortunately, not all of them will have the confluences because I don't have all the charts up putting back to that, but nonetheless, let's see, daily open, 200 hours right here. What do? Open immediately, spike to the high. What are they spiking to? They're spiking into the weekly support and resistance level. The 200, a retrace up to the 200 on the 1 minute time frame. So then you can, once again, do the same thing. You short the high, price comes back down towards the low. You can take your profits. Where do you want to take profits? That's up to you. You're anticipating price to form a low. The daily open for this happens to be down here. So they took off right to the upside. Price comes down, forms a lower high, W pattern. You can then long off the formation of the low. So right now as it opens, this is actually the low. So price comes back down, forms a higher low, W pattern, recovering this previous blue candle here, and continuation to the upside. So you take profits on your short, move your stop loss into profit. You can move your stop loss, you short up here, you can move your stop loss into profit above a support and resistance level. You see this is what we talk about on the vector candles. Red candle, next candle comes up, little wick to the upside, recovery to the dollar, continuation to the downside. We see this all the time. We see a candle come, wick up that previous liquidity real quick, good chance that they are using that liquidity and moving in the other direction, taking that out because they do not plan on coming back for a while to get it. You can see later in the session they did come back up. So now you are long. Price comes up here, you take profit again. Where's the take profit? Weekly support and resistance level. You're using the support and resistance for confluences. So now you have shorted, you have taken profit, your stop loss is in profit. You have longed, you have taken profit, you move your stop loss into profit. Where do you move it? Price comes up, find its first retrace level, continuation up, put your stop loss below that previous low, so that's in profit. What happens? Remainder of the session, price makes its way up, climbing, hitting all your take profit levels. Then the next morning, you might have been stopped out, but you hit your take profits. You go to the chart, set your take profits. Let's just, let's look at it here. So this was August 11th. Let's go back to August 11th on here. Let's see that price action, which should be this here. August 11th, daily open. Spike the high, spike the low, continuation to the upside. What were your price targets? Where would you set your take profit levels? Weekly point of control, previous high. You add the confluences together, previous zones of liquidity. That's where you're setting your take profit levels. Let's go to the next one. Bear with me once again. Here's the next daily open, the previous daily open to that. That's 2 in a row. Here's 3 in a row here. What do we see? We see price opens, spike to the high. What is the high? The weekly support and resistance level. There's your confluence. You're shorting. Price makes its way back down where the daily open is. 250 on the 1 minute time frame. 3 confluences stacked up that I can see just here on the 1 minute chart. Red candle comes in, so you have your take profit here. If this move happened fast enough, you might not even got a chance to hit take profit there. You might have got your take profit down here. What do we see down here? Recovery of a previous green candle. Red candle extended from the moving average. You can now, so now you have shorted, you have set your stop, you're waiting for your next rise to the upside. So you're shorting, you took profits on your short. You are longing, taking profits on your long. Where would that be? Probably this previous red candle. So you take profits on your long. Price comes up, stops out your short in profit, and then comes back down, finds support here. Your new state take profit, stop loss, is in profit. And then price continues up, hit your take profit levels, and then you get stopped out a few hours later. But you're winning, so you 2 wins. Once again, nice moves to the upside here. What were your confluences? What were your take profits? Here you go. Previous zone of liquidity. Hit there. Price comes up, makes another high. You can look on the charts. I'm sure there's more confluences there. 2 take profits hit. Short, take profit hit. Stop loss hit in profit. Long, 2 take profits hit. Stop loss hit in profit. If you're still up, you're looking for your next position. Let's move it along. Let's go to the next daily open, Tokyo Open. Scrunch it together. Here we go. Another one in a row. And here it is. So what do we have? Price opens. Spike to the high. It's extended from the 1 minute. Let's look and see if there's some previous liquidity here from a previous session. It's the 1 minute, so it's hard to tell. Anyways, let's go back. Let's stay on track here. So spike to the high. First off. Push to the upside. Huge green candles to the upside. Stopping volume comes in. Now you're short. Price comes back down. Where does it come down to? Looks like it came down to the scope level. From the swing low to the swing high. Comes down into the scope. What else do we have? Previous zone of liquidity. Price comes down, recovers to the dollar. This previous zone here. This next push to the downside. Boom, to the dollar, recovering this previous zone here. Nonetheless, back on topic. So, spike to the high first. We're anticipating a spike to the low after that to form the initial balance low. Spike to the high. We short. Price comes back down. What are your take profits levels? Well, you have the previous zone of liquidity. You have the moving averages. So you take profit on the way down. Now you've taken profit on your short. Price comes down here. You get another vector candle extension away from the 50. You're long. Price comes back up. What's your take profit? Daily support and resistance. Could have been your take profit on the downside too before you set your stop loss and profit. Price comes down. Find support. Come up. You hit your first take profit on your short. Draw your fib level, your scope, whatever you want. Price comes back down. Stops out your short, or I'm sorry, stops out your long in profit. Sorry, I keep getting these stupid pop-up ads. Give me 1 second. Where were we? So, price comes down. Take your profit on your short. Bang, you get your low. Price comes back up. Retesting the daily, you're adding these confluences in. Take profit on your long, set your stop loss in profit underneath the 200, which is what I'm sure the scope level will be for that. I'll just do it just to, just to show. Let me turn off the magnet here. So we got swing low, swing high. What do you know? Price comes down just under the 200, finds temporary support, break, retest, continue to the downside. You are stopped out on your long, in profit after taking profits, but look at your short. Hit a take profit, continues down to the downside. Next take profit level at the weekly. Keep moving through the session. Sorry, 1 minute time frame. Keep moving through the session. Price just goes sideways till you wake up. Continue to the downside, continue to the downside, continue to the downside to your next take profit levels. You can see price keeps going down. Your long is in profit. Your stop loss is in profit. Let me push these together. Let's see what happened later in the session. So your short is, look at that. Price continues down, continues down, continues down. Next take profit level, daily support and resistance level, and then you're awake for your next position. So there you go. Another example. Price moving level to level, taking profits. Let's go to the next one. Squish them together. All right, let's come down to the next. Oh, sorry, microphone fell. Let me fix that. Give me 1 second, guys. Do not want to redo this video. All right, technical difficulties done. Okay, here's your next daily open. Let's expand the screen. What do we see? Price comes into the open. So now you have to use your confluences on this. So I remember I was talking to people. I remember this position that we took. Price spikes to the high, but what do we see? Price is already extended from the moving average. What do we know? Drop, retrace, continue. Drop, retrace, continue. That's what we're looking for. Spike up to the upside. Green candles coming in to recover some of this red. Finding resistance at the 50 on the 1 minute time frame. So we short. Price comes all the way down here. Red candles coming in. Finally, you see these stopping volume candles come in. Last wick to the downside. Price fills in with railroad tracks. So you have shorted. You have taken profit on your short. Now you are longing. Price comes back up. What do we see? Recovery to the dollar of the previous red candle. Price lining up with the 50 on the 1. You take profit on your long. Open up, put your scope level here. Swing high to swing low to swing high. Let me make it the TR fib. Price comes back up. Find support temporarily. You put your stop loss in profit there. Price makes one more attempt at the high. Stops out your long in profit after taking profit. That's a win. Your short, still running. Let's push price together. Let's see what happens. Price comes down, hits take profit, hits more take profit, makes its way back up, and then you see you eventually get stopped out later on here. But this is the next morning. You're already looking at your new positions. Another daily open success. I think we have one more. Not sure how many I did here. I think we may have one more. Let's move to the left. 06. All right, I think that might be all 5. Okay, well, there you go. We went through the 5. So there's 5 examples of the daily open strategy. Like I said, I could go back and look at the next one. Where's 2000 hours here? 18, 19, 2000 hours. Where is it? Oh, there it is. What do you know? Let's take a look here. Just because. So we draw a vertical line. 8, 9. Where is it? 22. Let's look for a spike. Oh, there we go. So what do we see here? Just to bring it out one more time. We got the daily open. Price comes in, spikes the low right into the daily support and resistance level. We long. Price comes up to the next daily. Take profit. Short from the high. Price comes down back to the daily, back into the 50 on the 1. Take profit. Forms the next peak, continuation to the downside. Set your stop loss in profit above the previous high. Price comes back down, hits another take profit down here, maybe even a third take profit. What do we see? To the dollar recovery of the previous green candle. Take profit hit again. Price retraces up to the high, stops out your short in profit after taking profits. You have a new long position here. This was a different kind of open here. So the initial balance was formed later on in the session. Price comes down, stops out your long in profit after taking profits, and then you get another opportunity of the long at the next open when price spikes the low to recover. There was the confluence, spiking the low on the next open to recover that previous zone of liquidity. You're longing there, price making its way back up to the top, hitting 1, 2, 3, possibly 4 take profits, and then you get stopped out maybe later in profit. So just want to keep this video as short as possible. There you go. There is a little quick update on the strategy. You can see 5 in a row. Then I just did the 6th one just because. If I went and did the 7th, 8th, 9th, 10th, same thing every time. Spike the high, spike the low, or vice versa. Set the range and move out of the zone. Looking for those confluences. Confluence equals confidence. Until next time, trade well.